Hi guys, and welcome to another Good Vibes video. If you haven't been here before, my name is Damie, and a lot of times in these videos I just go over some of the recent research that I have done, some of the things that I'm looking at, and in today's video we're going to look at the market as well as talk about inflation and how that might affect the crypto market, as well as why there's a sudden shift from bonds, stocks and bonds over to cryptocurrencies for both individuals and corporations. So let's get into it. This is not financial advice. I'm not a financial advisor. Okay, so looking at the current state of the market, Bitcoin is holding pace right around the 44,000 mark. This is a super healthy value for it, as we saw it dip just below 30,000 not too long ago. So to hold a solid rebound at that 44,000 mark is a really good sign for the support in the market, as well as having Ethereum around the 3,000 mark and over the 3,000. We just saw a dip this week below the 3,000 mark, but quickly rebound and hold. So really good to see. And then obviously all the rest of the market is really following these two coins very closely. Like I said, in today's video, we're going to talk about inflation and how it impacts the crypto market, as well as what investors are looking at and why they're making the shift over to crypto. I saw this today, but inflation rate, this is announced on February 10th. U.S. inflation rate hits 7.5%, which is a 40-year high. So this is having a huge impact on other investments. Obviously, if you're investing or if you're holding your cash in a savings and making zero money back because you're just holding on to it, or it's sitting in a safe, you are losing 7.5% value on that money. So a lot of people are finding other ways to invest that money. In the past, it's been into gold, which still can be a very good investment, but people are seeing cryptocurrency as a strong alternative to that. So like I said, inflation hitting a 7.5%. This is hurting the bond market as well as all other investments. This article here by Francisco on the Crypto Globe saying that Bitcoin price could explode to $200,000 as investors drop bonds. So investors are starting to drop bonds, largely because if you put a lot of value into bonds, you're giving the government, in a lot of cases the bonds are for the government, you're giving them this money, and they say it's essentially an IOU. They'll give the money back with a little bit of interest on top of that. But right now, the government is driving up inflation with a lot of different tactics, and they are essentially bringing in or saving that money and not returning that money back to you. You are making, let's say, 2% back, which is the current 10-year yield on a bond to the U.S. government, and they're hitting you with a 7.5% inflation, so you're losing money in the long term on that. So big corporations such as MicroStrategy, led by Michael Saylor, they say the best use of money and time is to buy Bitcoin. They expect Bitcoin to go after gold and the bond market. Michael Saylor and MicroStrategy have been buying up Bitcoin on both the ups and the downs in the market. They were buying Bitcoin when it was at its all-time high, which I believe was 69,000, and buying it at the return to lows and all in between. They're really not concerned at the price because they expect Bitcoin in the long run to go to a value of around $1 million and will not sell until it does so. Michael Saylor and MicroStrategy obviously see a large return yet to come on Bitcoin, but even if we don't see these large returns, we do still expect to see a 2-3x if we do see this return, or not return, but if we do see this all-time high at the end of the year of $200,000 or close to that. That would be a great return on investment, obviously, over 5-6 times. And so if we got anywhere near that, obviously that'd be a much better investment and a great hedge against inflation. So a little bit more into what is kind of forcing the hand of these corporations and very wealthy individuals to heavily invest into the cryptocurrency and specifically Bitcoin market. Michael Saylor says here, he uses the analogy of a melting ice cube. MicroStrategy had a near $500 million saved, and when hit with 7.5% inflation or near that, obviously that takes a big hit on $500 million. And so he described that as seeing a melting ice cube, and he needed to act very, very quickly. He and MicroStrategy as a whole looked at all other forms of investment and saw they ended up seeing Bitcoin as the best alternative, as they saw this mass adoption and are projecting continued mass adoption into Bitcoin and other cryptocurrencies, but specifically Bitcoin. MicroStrategy has, like I said, been buying that up like absolute crazy and expect to see it hit that $1 million mark. And so obviously for them, that would be a much better scenario than that $500 million of losing value due to inflation. Even if it didn't hit that $1 million and it was able to maintain its value at around their average point of entry, which is somewhere between that all-time high at 69,000 and really $0 or whenever they started entering the market. So lastly here is a little bit about it talks a little bit about the 60-40 portfolio. In the past, it's very common for somebody to have a 60% investment into stocks and a 40% investment into bonds. But as we're seeing, these bonds just are not having the same return as the hit of inflation. And I thought this was a good graphic here. Talked about if your value of $100 and you invest it, it talks about how Bitcoin, it shows obviously roughly here without numbers, Bitcoin being a scarce asset, increasing scarcity, and early stage growth, which is that mass adoption portion, increasing scarcity being a finite amount. You cannot print or create more Bitcoin. There is a set amount of Bitcoin, and making it that scarce asset. It also talks about how you can invest into other companies, which MicroStrategy determined Bitcoin was better than that, and this graphic goes along with that. And then there's scarce assets such as gold, land, and art collectibles. MicroStrategy determined that it was risky to invest in real estate, and they just weren't confident in that investment. And gold is still a very good investment for somebody, but a lot of people, it follows a thesis, a lot of people's thesis around cryptocurrency and Bitcoin, that gold or that Bitcoin will replace gold in a lot of cases, as it is easier to move and really can, even though gold can last a long time, Bitcoin can last longer and really cannot be created or destroyed. Then there's inflationary assets such as fiat currencies. And here it uses airline miles, but fiat currencies is a great example. As you keep money under your mattress, that is just going to devalue over time. And then you have some extreme cases such as buildings, vehicles, and equipment. And obviously these are not good investments. And then you can just spend. This goes along with an analogy that I heard or read recently, which was the poor spend, the middle class save, and the rich invest. This correlates also very well with that. as saving is better. Saving a fiat currency is better than consumption or spending, but investing into equities, scarce assets, or what is projected to be the greatest is Bitcoin. If you enjoyed the video, don't forget to like and subscribe. Let me know in the comments what you'd like to see in a future video, and thank you for watching.